Friday the 13th, market analysis, Stan Ehrlich. Good morning. I start out with the stock market indexes and go to futures, and I'm going to talk about the Santa Claus rally a lot more. Plus, we have two brand new signals yesterday in silver bearish and copper bearish, both of them working very nicely this morning so far. And we have some very interesting, very profound setups in the stock indexes. So let's go. The E-mini's been overbought. We have seen it overbought for 4 days, a few days ago. And today, the rally earlier did not get above yesterday's high. Critically important for a bearish engulfing. You have to have a higher high and a lower low. Now, it does have the lower low, and it is extremely close to making a new low for the week since it topped out. Since it topped out. And that, of course, was on December 6th, the high day, which was a engulfing, but it was a higher close, therefore a bullish engulfing. And I probably mentioned on that day, I call that something like a bass backwards reversal. Normally it looks very bullish, but when that price action happens within overbought situations, conditions, it turns out to sometimes be an important turn down when it looks very much like it should be going up, plus the fact that it was close to the top of this wedge or upper slanting channel. So I think we're about to see another set of new lows for about a week plus. And that is much more convincing for me to say that we have been on our way down to the lows. I think are going to be right around Christmas, the day or two or three before Christmas. Let's call it a week and a half from now. And the price level could very easily be at 59.25. That's my best shot, but I can't ignore the fact that that brings you below the channel line, the wedge, bullish wedge line, bottom bullish line. That could be a little bit more bearish longer term. But there is support, period, at 59.25-ish. So we'll handle that as it happens. Maybe it'll be getting oversold. That'll be great. And then we'll just start bouncing back up again. Look at the 1 minute chart. In the last few minutes, we made another minor new low for the day. Keeps chewing into new low ground. This line represents the low of the break so far at 39.75 to be exact. And if you get below that, you'll be making new lows for a week. That's why I have the line there. It's just simply a reminder, alarm line. It could go off, by the way, and I'll turn on the sound for Zoom so you guys will hear it if it happens while we're in the Zoom meeting. And here we have a new low just now, jabbed into it. Next chart, we've got almost the same high today as yesterday for the spider. That high is actually about a tick below yesterday's high, therefore not a higher high and not a candidate for a bearish engulfing, which it would be if we had made that couple of ticks that were needed to get above yesterday's high. Too bad. That means this would be red if the rally was only 2 ticks more. It would be red now. We already went below yesterday's lows. We have been overbought within the allotted look-back days. We were close to the top of the channel. This is a good combination that has evolved in the last approximate 6, 7, 8 days for me to look for a break, and that's what I've been talking about for the last, 6, 7, 8 days. Next, coming down, getting close. This rally this morning was barely short of a higher high, like I said. The high yesterday was incredibly close to today's high. Too bad. Otherwise, it would have already turned red when we dropped below 604.35-ish. Next, we are at the top of the wedge for the QQQ, which actually did close above it. 2 days ago. Dropped down inside it yesterday. Today it shot to new high ground above the wedge, but it isn't holding it. We're now almost low and last. And yes, this is going to be a test of the top of a wedge just a few days after being overbought, with a divergence on the indicator with new highs a week ago, but not with a new high in price today, but not a new high in the indicator, divergence. And yes, if it makes it below yesterday's low where this yellow line is, it will set off an alarm and be a new short ER sell signal officially on, at this point, the high day of the move. And I think that's about to happen. Next, we got the NASDAQ. Basically, same story. Did not close above the top of the channel, closed right at it. Yesterday dipped a little. Today made another new high completely, but currently a little higher on the day, at the low of the day so far. And looking, and when I say day, I really don't mean day meaning daylight, I mean the session, since we're now having 23-hour trading time periods. So if it gets below yesterday's low, it's going to set off an alarm and be a red bearish engulfing on the high day, but I need to get it below yesterday's low. Next, the YM, the Dow, has not been doing the same thing at all. As I said before, yesterday, it's leading the way down with a Russell, and it got to the top of the channel. It turned bullish, overbought, and ended up topping out with some divergences, a new high in price after the highest RSI reading, but not a new high in the indicator divergence. And look what has happened past tense already. Every single day, starting on December 5th, has had a lower high and a lower low and a lower close, marching right straight down. Not common, but look, it happens. And there's no sense in putting an alarm in here because all I'm going to do is get more and more oversold. By the way, we are super close to oversold already at 27.11 at the moment on the RSI. Almost low and last. So is it going to start to bounce soon when everything else looks like it's about to fall apart? I got to say, these things are acting, contrary to each other at the moment. Not always, but lately, the last week or so, you can see the YM and the Russell I'm now showing you has been very weak at the top of the channel, very accurately, November 25th in overbought conditions, as well as the top of a resistance area. That's 3 reasons to believe it could turn down. And number 4, it gapped up. That's your exhaustion gap right there. So it's working like clockwork, right out of the textbooks. New lows, but look, 27 RSI, no place to go short. This is a place to watch to get out of shorts, a watch almost set in place when it gets below 25, I watch to go long. And if I was short, that would be a flip, a reversal. Look at this 1-minute chart. It just keeps nosediving. And I don't want to go back too far in time. I'm not going to bother. It just is, you saw it on the daily coming down. Now, bonds. Do I really have this 2-year head and shoulder bottom? I still think so. And today we are now officially oversold. Now I'm ready to watch it turn around and start to go up and be very excited about this level, approximately 116 area, to be a long-term major investor type buying opportunity with a stop somewhere around 15.5. You're risking a point, not necessarily a small amount of money per se, depends upon how big your account is, with a expectation of it going up to 126, breaking out of a formation that should say we're going up to 150, and you're at 116 with a 1-point risk and you're looking for a 35-point profit, yeah, it could take a 6-month, a year, maybe even more time frame. But I said investor. This is a very important longer term time frame and price level. It might go down a little bit more. My fail safe is closing below 115, 115. If that happens, I could be wrong about my longer term opinion. I certainly have to reconsider. Right now, it's just great. Oversold, near previous lows, timing is okay, formation's okay, nothing is going wrong. I'm very much wanting a green bullish engulfing any day. Notes, the same story completely. Oversold barely, but they got there. Oh, wait. Missed by half a point. 25.54 is the low RSR that's missing the oversold, but it's so close, it's essentially the same thing. All right, we'll see what happens in the next week or two. Very, very critical to interest rate futures. Crude, still between a rock and a hard spot, rallying for a couple days. No breakouts up or down. No overbought or oversold. I gotta wait. No opinion. Pretty much neutral. Just don't know which way to go at the moment. Next, pretty much the same, except this has got a well-defined long-term downtrend. We're still very much in this channel. And after this rally in the resistance area, it's just touching today for the first time in a week or two. Stops rallying. If it does stop rallying, then I do expect to see it break 2.1 and keep on coming down. So my favoritism is toward the short side, looking for a sell signal, not overbought yet. All I got is a little resistance area. We'll see what happens. A little ambiguous about this, but a little more evidence toward the short side. Next, we've got natural gas. Touched the bear trend line yesterday, pulling back some today. No engulfings, not much. Is this possible? Head and shoulder bottom going to work. The blue dashed line is the neckline across the highest high after the first shoulder and before the head, and the pivot point after the head of the formation and before the last shoulder low. I don't like the fact that the last shoulder is so close to the head. The timing of this should be approximately the same, right about in here somewhere, time-wise, as the first shoulder. So the first shoulder is at end of August. That's 1 month. 2 months later, but 2 months from the head, which was on November 4th, is going to be January 4th, give or take a little. So are we going to go down again to this support level and have a last shoulder in the future, which would be about 3 weeks from now? Maybe. As long as it doesn't go below the yellow zone support and starts to go back up, this big pattern could still be developing. Right now, it had a chance to break out yesterday, touched the bear trend line, but not the neckline, so that's not a breakout. And it's still developing. I think I should be putting this somewhere around here. Matter of fact, I'm going to leave it right there. Next, gold, silver, platinum, and copper. Yesterday, gold had a bearish engulfing. I talked about putting the lines in. I've done that this morning for the shoulders. We have a neckline that slants downward a little more than I'm comfortable with, but the body parts are here. Everything is working now. I think we had the last part of the last double shoulder yesterday with the bearish engulfing. This little double shoulder on the left, I've outlined again, and the head of the formation, the top. Too bad we didn't get a sell signal exactly on the high day or exactly on the first shoulder, or for that matter, yesterday. I do want to point out it came extremely close to getting overbought, in which case it would have had a bearish engulfing yesterday, only because our RSI was just a little bit shy got up to 74.47. I need 75 or higher. Close, but no cigar. Next, we got everything we wanted yesterday in silver. It's a giant bearish engulfing ER sell signal, and we are down 0.60 at the moment, relatively close to the low, down a significant amount, and I'm detailing you, showing you the ER1 overnight trade, which is this trade line here. The trailing stop has already dropped down to 31.43, below our short entry, which was be at 32.40, and the scalp of the trade got out at 32.01 yesterday, made some money. The overnight is still short, and here we are at 31 almost exactly, and short at the same price yesterday at 32.40. Working great. How low can she go? And that answer could be, that was the last shoulder on the head and shoulder top. A little lopsided, yes, but the body parts are there, so I'm uncomfortable with the timing. The neckline sliding down a little bit, it's not that unusual, so that really doesn't bother me. Gold does, it's a lot more slanted. And if we break the neckline and the whole big pattern works, and it's a reasonable size, October, November, December, 3 months, normal, we're going to go down all the way a little below 25. That would be a great intermediate to long-term trade. So far, the scalp turned out to be profitable. Yesterday, the ER1 longer-term position trade is still short, and we would need a rally back up to about 32.38 in order to get short for ER3, which may not happen. But I've got today and tomorrow and the next day to get short ER3 if it rallies that much, and it doesn't look like it's going to happen. But everything else is doing very, very well. We only get about 40% of the ER3 possible trades to actually get filled. The signals are there. The code is there. It works when it does cooperate as far as the trades are concerned. Some make money, some lose money, but at least it gets in when it should. But you need the retracement. Next, we've got platinum. It's already making new lows since the beginning of September and coming very close to its downside breakout for its head and shoulder top, which is basically the same thing as gold and silver. And the downside objective on a breakout would be 796-ish. I should move this down to about that. And now I'm saying closer to 790. Exactly. 791. That's the approximate, very close to exact downside objective. Remember, there's no point in being super to the tick exact as far as pattern objectives are concerned. As long as they come within a percent or 2 or 3, you made it. I mean, it did it. If it goes further, which often happens, great. These are minimum objectives. Okay, copper had a bearish engulfing yesterday. Here's an unusual situation. We were short from the top of the rally, September 30th, all the way down because of an ER3 entry 2 days after the signal, which is on the high day. Now, we're short at about 4.7. We rode it all the way until 2 days ago when the rally stopped us out, but it also got overbought. Coincidence. Yesterday, we ended up with a bearish engulfing after being overbought, which it was. Brand new sell signal. How come we're still not short from way back in September? Well, we got stopped out. So we get short again yesterday. Unfortunately, a little lower than where we got out of our previous short. But that's the way the code is written. That's the way the strategy is written. Luckily, we're short again. And it's going down to new lows since yesterday. And it's working just fine. I don't know if I'm going to get a rally back up to 4.27 in order to get short for ER3s, but ER1 always goes long or short on the signal day itself, which is either red or green. Okay, crude. I'm sorry, soybeans bean oil, bean meal, corn, wheat, then cattle and hogs, and a stock. So now we're starting to slip again in beans. Remember, I've been waffling back and forth between talking about bullish potentials, bearish potentials, and for well over a month. It's been 2 months. We've gone nowhere. So it's very frustrating. But I'm back on the bearish track, I've got to say, unfortunately. I think the support level is going to get busted and then look out below because I think it's going to make a new low for years and start to trend lower again fast. So this support range, which has been really, really good so far, I think is going to get busted. We are already short from a sell signal on November 14th. There's our protective stop. I never moved, luckily. Now the green trade line from the entry price and date is getting a little more steep to the downside, and that's exactly what you want. It says, we're making more money the faster it goes down. That's what's about to happen, in my opinion, next week. Maybe as soon as Monday. I don't think so today. Soybean oil. Resistance stopped the rally, didn't get overbought. We're in a no man's land. We're stuck between a rock and a hard spot, basically. And there are longer term bullish potentials here. This support area at around 40 and a half has done a marvelous job so far. But I've got maybe a double shoulder. The bottom is the head, of course, and maybe a double shoulder in here. If it makes lows lower than 40 and a half, it kills the bullish story. And that pattern is going to disintegrate. If it doesn't and starts to rally right away, next week, today, back up above, let's say at least 44.22 and more, then this double shoulder low seems to be back in business. But you have a little zone in here where it could fiddle around, and the only way to destroy everything is to go sideways too long, and that is not likely. You're either going to break out to the downside and kill the pattern and go down a lot more, which is something that happens with head and shoulders that don't work, and that's fine, or it's going to work. I vote for not working. What about meal? Well, we are testing every significant support level going back a long time frame, all the way back to December of 22. That's December of 23. Here we are, December of 24, back 2 full years. There are a couple of lows that are just a little bit lower at 282 and a half. They were back in May and June, it looks like, of 23, way over a year ago. And that, I doubt, is going to hold the break. This is a potential new low close for months today, right now, at these prices, on the edge of oblivion, so to speak, and starting to go just a little bit lower, 85.70, 85.40 is going to be the trigger. 85.30 should start the real crash. Well, maybe. And down. And it looks like it could happen any minute. Wait a minute. The low is 86.10 and we are 86.20. One tick from the low of the day. I'm not going to stick around to show you, but this is in progress, I think. Okay, corn had a breakout to the upside October 10th. Big bottom pattern, acting normal, breakout, large up day, got overbought, not unusual. The promise was the rally should carry us, the bull market should carry us up to 494. But on the minor retracement Wednesday of this week, it still was overbought and it held the neckline, which is fine. It was supposed to stop here at 447 and go up. Yesterday, it got below the neckline, closed below the neckline, which is a no-no. And today, we're going down even more. That is a double no-no, so to speak. I will still talk about the head and shoulder bottom with this 2-day violation if all of a sudden we scream back up above 450. If we don't, this pattern is dying or dead. then I would expect a move to 427 and breaking support and a move down and down and down and down. And frankly, that's very plausible because the pattern is not doing what it was supposed to do. We're failing on the head and shoulder bottom. Wheat, possible broad double bottom, pretty good size, 3-4 months, still potentially in play, but it can't make a low and close below 540, and it's heading down here the last couple of days. 552 is not too far away. Doing that would kill the double bottom and cause it to break down even more and more and more. The trend in this is obviously down for ever since the war, which was way back on the date of when wheat topped out 3/8/22, 2.5 years ago. By the way, we got a sell signal on the exact high day. Incredible. 3/8/22, an ER red bearish engulfing happened, and that was the top of the bull market because of the war. Sorry about that cough. And I have to be looking for bearish downside breakouts. The bottom is still possible, but don't jump just because it looks like it's going to. Establish some kind of definitive, oh, it's good, price level and time frame, and then go ahead and do something about it. But right now, I don't have that. I have a possible, and the possible seems to be in grave danger, and it would break the support, which I'm expecting, and head south big time. Now, cattle broke out above resistance, made a new high for a very long period of time, years. But it also got overbought yesterday at the same time, and it totally failed. The close was below the previous day's low, back into the trading range, and I see that as a failure. It's not at the moment. We dipped down a little bit earlier for the low, a little below yesterday's low. But here we are back up above the resistance level again, and looks like it's going to have a new high close to the move. So what was yesterday? Overbought and a test of support, and it dropped into it and is pushing out of it again. So with this price action today at the end of the week, which is a little bit more important for weekly charts, which I don't use. I used to for over a decade. We only had daily data charts for the first 10 or so years that I was in the industry. And even longer than that, more than 10, more like maybe 15, until finally the internet was allowing us to draw intraday data charts and so on and so forth. That's around 85, 1990, maybe even early 90s. Here we go. I'm back to bullish on cattle. Next, Miss Piggy, bullish engulfing today, close to support, and it looks like it's going to come back up again also. Didn't come down quite as far down as I expected, but obviously the move or the trend is up since oversold in July, on July 11th. I'm favoring the upside at this point. A few days of bottoming out and a new attempt at new lows, didn't make new lows, and it turned up. So this is a new high close probably in the last 4 days. Moving above, staying above 87.95 would be looking a lot more bullish. I would totally expect it to push through the top and make new highs for this major trend. Here we are with my SQ stock. A minor new low today. No surprise, the indexes are making new low also for a little while. The overbought condition did stop the rally. You had a little bit of an upside gap, exhaustion. You do have an old gap from a couple of weeks ago to come down and close, which would be fine for me, 90.05. Even coming down to say 89.55. And I cannot rule out something in the ballpark of the mid 80s to the high 80s. But again, that doesn't change the longer term trend. I'm looking for a lot bigger move to the upside. This is a very big 2-year trading range with great support levels and what could be construed as a very flat, large, really long-term shoulder. The head of the formation is around October of 23, and the last shoulder, a little bit better defined, is in the ballpark of a very large time frame, bottoming at the lowest at August 5th. So you got a really big shoulder and a really big shoulder and a head. The symmetry is okay. The pattern's okay. It's just a really flat, run over by a truck pattern, but it's parts are there. The rules are there. The neckline has been broken. The test of the neckline has happened. We made a new high afterwards. And as long as it stays basically at or above the neckline, I think it's likely to go up to a minimum of 134-ish and a lot higher, very possible. Okay, that's it for Friday. Oh, Santa Claus rally. Buy it 1 business day and 2 business days and 3 business days before Christmas, which happens to be Wednesday, 2 weeks from today, the week after next week. So that means for the calendar standpoint, you're buying it on 24th of December, Tuesday, Monday the 23rd, and Friday the 20th, Friday next week, at a very early in the day. Now, I'm talking about the first half hour of trading. I'm going to pin it down to the exact minute next week, but that's pretty damn accurate when I tell you the exact dates and within a half an hour. When do you get out? First trading day, January 2nd of 2025, Thursday. Friday, that's 1/3. A second third on the 3rd of December, Friday, and the last third, Monday, 6th of January, 2025. And the time of day is around 11 o'clock a.m., relatively late in the trading session from 6:30 to 1 o'clock California time. And I am talking about the S&P 500. You can obviously use the E-mini instead of the Spider because they go up and down together, just different numbers, same timing, same dates. That's your Santa Claus rally. And next week I'll have updated my historical track record, which will be very impressive. And using those points in time, which I will even detail more accurately, down to the 5-minute mark, I think. So stay tuned. Santa Claus rally coming up real soon, 1 week from today. You have a great weekend and profitable trading to you.